Good afternoon and welcome. Thank you for joining Strategies for Healthy Cash Flow Management, presented by Pathfinder Bank. My name is Susan Kennedy, and I'll be your moderator today for this hour-long webinar. We're so happy you're here to join us. Now, as small and medium business owners, you understand how essential cash flow is to managing your business with confidence, and how essential cash flow is when making strategic decisions regarding company growth. Now, today, our panel will walk you through best practices to help you manage your business's cash flow and build projections. And they'll guide you on ways to access capital to keep your business running smoothly and, importantly, drive growth. They'll explain the value of building and keeping strong business relationships, very key, and ensure you know the best way to build the right advisory team that is essential to your business's long-term growth. Well, there's a lot of valuable information to get to today, so let me start now by introducing the wonderful team that is here to help us through all of this and have us learn lots and lots. Ron Tascarella is First Vice President and Chief Lending Officer with Pathfinder Bank. He oversees the bank's commercial lending and residential lending and investment services department. Thanks, Ron, for joining us. We appreciate your help today. Why have someone like Ron on the panel, you might ask? Well, having a strong relationship with a bank and a lender like Ron is invaluable to your business, especially when cash is tight or threats or opportunities confront your business. We'll learn more about these banking relationships in our discussion. Next up, Greg Smith is a tax senior manager with Dermody Burke and Brown. He provides financial and tax accounting services to a variety of industries, including small businesses. Thanks, Greg, for joining us today. Now, why have a business accountant on the panel today? Well, accountants can play a crucial part in early detection of cash flow problems. And professionals like Greg can help you figure out ways to quickly infuse some capital to help keep your business financially stable. Greg will have lots of tips coming up. Next up, we have Natalie Hempson Elliott. She's an attorney with Bousquet Holstein. Natalie represents clients in business, real estate, and public finance transactions, and advises clients in matters relating to entity restructuring, lending, financing, and succession planning for business owners, among other things. Thanks to you, Natalie, for joining us. So now, why have an attorney on the panel? Cash flow, of course, is the lifeblood of your business, so critical to its growth. And an attorney like Natalie can aid you by taking a comprehensive look at your business plan and ensure your business is protected and managed correctly to best fund short-term capital needs and long-term strategic initiatives. We have so much to get to, but first, just a few pieces of housekeeping before we get to the heart of the conversation. We are recording this, thank goodness, so you can refer to it as reference. It will be sent out in a thank you email that you'll receive and be posted on the Pathfinder Bank website as well as on Syracuse.com. So you can always go back for reference. And of course, most importantly, your questions add so much to our conversation today. If you have a question, please drop it into the Q&A section of the Zoom process here. And then at the end of our conversations, about 45 minutes with the panelists, then we'll open it up to your questions. So if you have any questions along the way, just type them in there and we'll get to them at the end of this hour. We really appreciate your experiences. So, ask away. All righty, that's the housekeeping, the introductions, and it's time to get down to the facts about first right now with you, Ron, defining cash flow. Ron, and let's actually start with you, Greg, my fault. What is cash flow management and why is it critical for any successful business? Greg, can you start us off there?
Sure, Susan, and thank you for having me, and thank you for the question. So cash flow management is really the flow of money in and out of your business. So our desire is for positive cash flow, right? So more money is flowing into the business than out of the business. Some of the things that generally lead to poor cash flow could be the result of late invoices to customers not paying invoices timely, possibly sitting on large obsolete inventory and not being proactive in your bank financing, or lack of attention to spending and other financial health of the organization. Cash flow has been described, as you mentioned earlier, as the lifeblood in an organization. without positive cash flow, how does the organization make things like payroll, invest in new technology, create that new marketing campaign to move forward? Really, the attention we give to cash flow today will greatly impact the organization's future success.
Ron, thank you, Greg. And Ron, what data should you as a business owner really be paying attention to as it relates to cash flow? I mean, money is money, right?
Yeah, thanks, Susan. Some things I would look at, your accounts receivable, inventory listing, really making sure that you got enough cash to pay yourself, pay your employees, and pay your suppliers. Business is successful really based on its cash flow. That's how it's valued. That's where the benefit comes from. So, when you're looking at, the net income statement is important, but it's really the cash flow. They would call it your UCA cash flow, as you see here on the screen. So all these things impact it, whether you're buying equipment, whether you're buying, you're prepaying expenses, you got your accounts payable. It all factors into what amount was actually in your checking account at the end of the day. So.
I mean, having a small or medium business or even a large business, Ron, it's about making money and making a profit. So can you define right here at the top, what's the difference between all of this cash that I'm seeing on the screen versus just a good old fashioned profit?
Yeah, the difference between the two is really what amount of your revenue becomes cash in your checking account at the end of the year. Growing a business costs an enormous amount of money. As you grow customers, you're growing your accounts receivable, you're growing your inventory. That's a use of cash. Now you can finance that many different ways, maybe with a line of credit, maybe with cash earned. If you make a decision to buy a piece of equipment, that affects cash. You got to pay for it over a period of time with a term loan. All those things affect cash flow.
Sounds like we can go very deep on this. So Ron, let me continue here. When building a team of cash flow advisors, you probably need to make a budget. So let's get to this next question. We'll start with you, Ron, and then Greg and Natalie, if you could add in. As you develop your cash flow strategies, who are the people that you should really be consulting? Because it doesn't seem like every business owner is going to be able to manage this on their own. Who should they be consulting? Who can they ask for help? We'll start with you, Ron.
Yeah, I think it depends on the size of your business. As you get bigger, you have more internal resources. You have your, chief sales officer, you got your controller, your accountant. But initially, you're going to be working with your accountant, your tax preparer, your banker, getting honest feedback about how your business is generating cash and where it's going, and your attorney, getting feedback on how you should form your business. What are the risks to look for? Those are really the key people to put on your team.
Greg, do you have anything to add to that? Who are the people that people should be looking for help?
Yeah, to build on that, I think Ron hit a really good point, right? The size of your business, every business is going to need, different systems and different people. Within your business, though, the owner needs to have, like I said, key people that generate accurate and timely financial records. To me, that's where the cash flow process really starts. Financial records are going to show the financial health and the potential of the organization moving forward. And it can be overwhelming and daunting, but I like to think of those financial records as really the report card or scoreboard for your business, if you will, right? We're all familiar with that in school and in sports. It's the same thing, just in the terms of a business. And these accurate and timely financial records will give you, the business owner and other leaders, the ability to identify areas for improvement with respect to cash flow in a successful organization. And these financial records should be considered as a tool and reviewed on a regular basis. Far too often, these records are really seen as a burden, right? There's a burden that we have to give to Ron at the bank, or they have to give to someone in my shoes as the tax preparer. But really, that regular review helps manage the cash flow.
Okay, keep things smoothly. Natalie,
Yes.
Pipe in here. Who are the people, and you're an attorney, so how does that fit in? Who are the people that even small and medium business owners should be having on their team?
Well, as Ron and Greg both alluded to, whether you have a small business or a large business, an attorney can help, organize, inform the business, recommend type of entity, help with partnership disputes and other issues that may come up, help with, selling your business or acquiring another business. So there's a lot of legal elements that affect all businesses, whether you're small or large, and having, a relationship with an attorney that knows your business inside and out can be valuable to saving costs later on.
Am I hearing that these are people that I can have in my company if it's large enough, or it can also be people that I hire that are outside my company, correct? All righty, great. So next we're going to talk about the budget, which sometimes is a challenge for people. So describe, Ron, if you could, why it's so important to create a cash flow budget.
Yeah, thanks, Susan. So I think the big thing for businesses, focus on what you do well, what makes you money, and then the cash flow budget just becomes a tool. Making sure you got the resources available to run your business. You have enough money to support the growth. You have enough money to support a slowdown in revenue or an increase in expenses. But it gives you the confidence to go out and run your business, knowing that the money is there and available to spend. I think that's why it's so important just to look down the road. A lot of business will create what they call a 13-week cash flow. So they'll go out 13 weeks and see, hey, what accounts receivable is going to come and what inventory do you got to spend? What do the expenses look like, revenue growth, just so they can just focus on running the business.
Sometimes families run that way. I know my husband and I, we have like calendar checks, like check in, what's the calendar like? What's the cash flow like? Usually I'm the one who needs some amending. So little revealing there. Okay, so Greg, we've got the reasons kind of why it's important to have the cash flow, but if you could go some more details, the key elements that our viewers might need to consider.
Yeah, so we talked a bit about cash flow already, right? So this is the visual to cash flow. This is the statement of cash flows as you see there on the screen. And this report really ties together the other two main financial reports that a business is going to see. The balance sheet, which is going to show your cash and other assets and things that you owe other people, and then the profit and loss, right? The profit of the business. And this is going to bring both of those reports together to show cash movement within the organization. And it also ties together visually what a lot we've been talking about already. This is broke up into three sections, right? You see operating, you see investing, and you see financing activities. And the very top one there is really one of the most important, it's the operating activities. And that's where we should have that positive cash flow, right? You see the net cash provided by operating activities. That's the day-to-day operations, right? The net income, receivables changes, other expensing items, a bunch of payables, and as Ron mentioned, prepaid expenses. So if that number is positive, day-to-day, we're doing the right things. Okay. Then we get into some of the investing activities. You'll usually see there as noted, purchases of large equipment, real estate, and then you get into the financing activity, which is really that money that comes into the organization through loans, money that goes out through distribution. So this really shows you, one of the examples I always see is, we as a business, we made $75,000 this year. I should see an extra $75,000 in my bank account, but we don't. What happened to it? That's what this report's going to show us, right? Because we had loans that were paid off. We bought new vehicles, things like that. So this is really going to give you that insight as to where all that cash moved within the organization.
So Greg, how do you maintain a cash flow budget like this? I mean, Ron had mentioned this 13-week touch point, but are there other milestones and data that business owners should be paying attention to?
Yeah, certainly. Number one is to get that budget created, right? And we encourage our business owners that we work with to create that budget on an annual basis. And then step two, to have those accurate and timely financial records. So every month you can compare, okay, here's what we said for January, here's what actually happened. Then we can start to ask questions like, what are our differences in expenses? What are our differences in revenue from what we planned on having to what actually happened? Other questions would be, what caused these unforeseen changes? Should we be modifying the budget moving forward? Maybe there's something that's occurring this year that we didn't anticipate. Do we need to change our operations internally? Do we need to hold people accountable? So you can see that this really is that report card for the whole organization. And bottom line, starting with the vision of what we want our financial picture to look like and holding ourselves accountable to the actual performance, we can achieve the goals within the organization, right? Without this type of process, we leave ourselves vulnerable. And we might not be able to achieve the future that we're looking for in the organization. So this is a good way to set those goals and then constantly measure those so we can pivot and make changes as needed.
Everybody needs a roadmap, right?
That's
Especially
right.
A small and medium-sized business. So let's move on to dealing with lines of credit. I know that's a large element in this cash flow budget. Ron, let's start with you. How does extending credit fit into this whole cash flow process as a credit lender yourself?
Yeah, so when extending credit, really there's three things banks look for. It's cash flow, collateral, and then guarantor support. But without cash flow, making a loan is extremely difficult. Looking at a line of credit, as you mentioned, that typically would be used just to finance what we would call your current assets, your inventory, your accounts receivable, your things that are on the top half of the balance sheet that are due within under 1 year. So we'd probably look to match that up to kind of keep your permanent working capital and your day-to-day working capital in the right ratios.
And then Greg, I guess this is a follow-up for you then. When you're getting credit, should you look out for? How, and real important, how do you plan for the downside? Because there are downsides, especially in small and medium businesses, and especially in the climate as it stands now.
Certainly, good point. So, number one, as Ron mentioned, is having a good relationship with your bank is key, right? So you have a trusted professional in the banking world that can help you walk you through these things. Running those options also by your CPA or accountant, somebody that just have a second set of eyes. Far too often we're placed in a situation where the business owners will make decisions, and then we're trying to navigate the best way out of that situation or to help make that a better process. And really, the outlook could be much better if we were involved in part of that decision making. But overall, understanding the terms of the loan options, considering all the options is really vital. And just keep in mind, the worst thing that we can do is make these financial decisions when you need the money tomorrow, right? Because in that situation, you're most likely going to be paying far more than necessary for that financing. And, the one thing I always say is no matter how healthy and cash positive a business is, I would always recommend a line of credit with a good bank, because you never know, you make that large purchase of a new truck or a new piece of machinery, and that customer you've had for years maybe pays you a week later than normal. And now payroll's coming up. What do you do, right? Why would we put ourselves in that situation? So by having that line of credit available, we move the money in, we pay payroll. Next week, we can pay it off. I really like analogies to help paint a better picture of what financials look like. And to me, that cash is that fuel in the business, right? And it doesn't really hurt to have a spare tank. And that's to me what that line of credit is. Even if it's not a day-to-day necessity, it's good just to have it there, because things are going to come up and it's nice to have that option and then pay it back as soon as you can. So having that relationship with the bank is key to have that.
You have that trough of money that's there
Yeah.
to bridge the gap, should the gap happen. Yeah. And you're not
Exactly.
just frantically panicking in that moment. Thanks, Greg. So Ron, what should business owners look for in a credit lender? How can they build that relationship with somebody like you?
Yeah, they should, talk to multiple different banks and get someone that really takes the time to get to know their business, gets to know their business model, what makes that business successful. Someone that's going to give them honest feedback, and that they really get, relationships at the bank, and not just with, the lender. There's other folks, your treasury management, your cash management folks, your branch managers, senior executives, so that if they experience tremendous growth and they need additional assistance with available capital, that's one thing. And, if they were to hit some times where maybe revenue were to slide or expenses were to increase, they have a partner that they can tell their story to and potentially get the most help that they would need to weather that storm. But it's just taking the time and investing in those relationships that becomes so important, knowing your banker and your accountant and your lawyer, because those three people are really going to help you through the good and the bad times, or just the day-to-day kind of grind of hopefully making money and moving forward for your business.
Okay, so Ron, I'm a small or medium business owner, and I am, I'm working 12 hours a day as it is. What do I really do? Do I call the lender of a friend? Do I walk into a bank and just ask for anyone? What's the real example of how to start those relationships?
A lot of times it's really a referral from someone that you trust, but certainly if you see a bank in your community that has a good reputation about doing the right things, if you walk into a branch, you can get connected with that commercial lender, but taking the time to get the right person. But really, I would reach out to folks you trust. You got an attorney, an accountant, they know folks that are probably going to be a good fit for your business, that are going to see the value in what you're doing each day. So.
Okay. Good tips. Thanks so much, Ron. Hey, Natalie, we're going to get you in here. This is for you. From your perspective as an attorney, what should the borrower be aware of when seeking to obtain loans or lines of credit for their business? I mean, I know you have lots of suggestions that we've talked about off camera. Please start sharing.
Thank you, Susan.
Mm-hmm.
So one of the things that, when I'm representing a client or, representing a lender, lending to someone obtaining a loan, one of the things that as a borrower, you really want to make sure you're paying attention to is the commitment letter or term sheet that the lending institution provides you, and make sure that you're able to, meet all of those financial covenants that they're requiring. And then when you get to the point of, closing and signing your business away on the dotted line, you really want to, review the loan documents, make sure that all the representations and warranties that you're making about your business are true and accurate. Whatever the debt service coverage ratio is that the lending institution is requiring, you're aware of it, you're going to meet it every year. And just to go back to the financial covenants, make sure that you're paying attention to what those are. You might not be able to take out further financing or further encumber the business without receiving prior written approval. And during the life of the loan, you're going to need to provide financial statements, tax returns. It could be yearly, it could be quarterly, whatever the lending institution requires. And then you might also want to review what happens in the event of default. So if if any of the events of default occur during the life of the loan, you want to be aware of what those are. These are some examples from loan documents of standard language. So if you default on the indebtedness, it could be a day late, it could be 10 days late. Most lenders would work with you and give you a chance to cure, but even missing one payment still is an event of default. If you go bankrupt or there's foreclosures or anything of that nature, that would be an event of default. If you want to change ownership, so if you want to sell 10% or 20% or 50% of your business or bring in a partner, you would need to seek prior approval. And if you don't, it could be an event of default. So it's really important to pay attention to the documents that you're signing, and having an attorney or a trusted advisor to help review those with you, or someone that can take a look at something quickly and make sure that you're aware of what you're signing is really important.
Good advice. I mean, even if you're taking a mortgage out on a house, you can't also necessarily go buy a car at that time and take a loan out. I mean, so you do need to keep your ducks in a row. And here's a second page of information for events in default. Continue, Natalie.
Yep. So I kind of, highlighted a couple of these. A lot of times, you will have a cross default language in your document. So if you have other existing loans with the same institution, but it's a separate line of credit or a separate term loan, a default under those documents is the automatic default under all the other loans that you have. So it's just really important to be aware of what causes an event of default and making sure that, you're running your business in a way that is transparent and not going to get into one of these traps.
Mm-hmm. That's a lot of information there. And just a reminder to our guests today, we are recording this webinar and you can access it through the Pathfinder website and through Syracuse.com. So you'll be able to, you don't have to frantically write any of this down right now, but it's really good information. Natalie, a follow-up, what are ways that business owners can strengthen the relationship with the lender? We've asked Greg, we've asked Ron, but from an attorney's perspective, what do they need to do? You mentioned previously to me that businesses need to be buttoned up. Explain.
Yes. So, and it sort of all falls into, some of the things that Greg and Ron mentioned, but whether you're starting a new business or you have an existing business, really ensuring that all of your financial records, your balance sheets, your income statements, your, tax returns, all of those are, prepared correctly, easily accessible. You haven't missed any deadlines. And if you do, you're on extension, making sure that you're running the financial side in a positive way. Corporate records, if you have an entity that you're operating out of, making sure that, you're following all the corporate formalities that have to be followed, approving resolutions, updating operating agreements as needed, making sure that all of those items are in order and easily accessible. Because when you do go to get a loan from a lender, in addition to looking at cash flow, they're also going to want to see all the other due diligence related to your business. So making sure that you're keeping track of things, you have good records, is really going to elicit trust from the lending institution and want to work with you more.
I mean, you're right. If you're all buttoned up, if all the ducks are in a row, it's going to make the next step that much easier, I suspect. Thank you, Natalie. We're going to move on to short-term versus long-term cash management. And there is indeed a difference. And I'll have all of you weigh in on this first question, but Ron, we'll start with you. How do you plan for those unknown, inevitable expenses?
As Greg mentioned, having a line of credit available. What I've seen, whether you're building a building or you got a business plan you're executing, things always seem to cost more and they always take a longer amount of time. So just building that into your schedule, planning for having a contingency plan. If you're a small business and your business is well capitalized, doesn't mean that you shouldn't have a home equity on your house in case you need to inject that capital. I would say always be looking for opportunities to have a backstop. Because you never know, when one of your customers could change plans, they could get sold and, your revenue could dry up and you just got to weather that storm as you work to generate new revenue sources. So I'd always be looking at that as how do you maintain your business moving forward? And at the end of the day, having cash to do that is key. And when I say cash is also capital, bank lending, line of credit availability.
Okay. Not just money under the mattress. All righty. And Greg, your thoughts on how to plan for inevitable unknown expenses. They are always happening.
Yeah, so to bring up some of the things that Ron said too is, as much fun as it might not be, but to try to plan for some of those events, have some risk management strategies and find ways to mitigate those. And then, speak with your banker attorney about how we can mitigate those things. And the best thing is if your organization is fortunate enough, have some spare money in a separate savings account for those rainy days. We said before, establish a line of credit and be diligent on those reports for financial records and use those as a tool so you can see the storm coming. That's really your best insight to have a pulse on the business is looking at those financial records and compare that with your planning and just seeing where you're headed.
Okay, thank you, Greg. And Natalie, thoughts on how to plan for the inevitable unknowns?
Yep. So to continue to hammer home the point, I mean, definitely good to have cash reserves, for, unexpected occurrences like, pandemics or, loss of employee, litigation, partnership disputes, things like that. And one thing that, can ultimately, save money if you're experiencing something like that is if you have a pre-existing relationship with an attorney who, knows a lot about your business and, knows your history when some of these unexpected events arise, we're not starting from scratch. We have a working knowledge of, your industry and your business and can hit the ground running to help, solve the issue rather than, starting from day one, reviewing everything, so while attorneys can be costly, having a working relationship like that does serve a good purpose if, we understand the history of the company and can help you navigate it.
That makes a whole lot of sense, right? Have that relationship first. So when the potential icky stuff happens, you can deal with that rather than just trying to build that initial relationship. Thank you, Natalie. Greg, what do you think the best practices are around record keeping for automation, clarity, accuracy? I mean, this is a detail-oriented element of any small or medium business, and planning for all this stuff is so essential. How do you even get started?
Well, it's a good question. So it's certainly not a one size fits all. Every organization is going to have different needs. And really the last thing I like to see is the business owner or other leaders in the organization performing the day-to-day accounting functions, because that's what's measuring all this cash flow, right? Is the day-to-day accounting functions. There's people out there, right, with the right skill sets for these different tasks that are in the accounting world. And as a business owner, you need to understand these financial records and use them as a tool for the business. But with respect to writing checks and recording deposits, the business owner's time is certainly more valuable. So it's bringing yourself around those people, whether it's a bookkeeper, controller, CFO, part-time, full-time, depending on the size of your organization, those things are necessary. And owners need to lean on the expertise of those people to help guide the organization. And, it can look like a direct hire. It might not be necessary. Many back office processes, HR, human resources, accounting, legal, other things can be outsourced, and there's really not a need for employees. And that's one of the things our firm offers is outside outsourced accounting solutions where we manage the day-to-day, provide up-to-date financial records, key performance indicators, and we have those regular scheduled meetings with the business owner to help guide the organization. So that's key, no matter what format you have, is to have the right people in place. And no matter your direction, the key is to have those systems, written procedures on those systems, and the right people to guide your business. It's really essential for everything we've talked about here, but being proactive and having those reoccurring meetings and holding ourselves accountable to the goals that we set is going to make the business the most successful and allow for these sound decisions so we can plan for the future.
Thank you. Good answer. Natalie, what kind of entities are needed in order to best run your business and aid in good cash flow management? From your perspective as an attorney, when we're talking about S Corp, C Corp, does that all come into play at this point?
Yes, it can. And we could have a whole separate webinar on discussing different types of entities and the different, nuances of each. So I would say initially, if you're looking to start a business, definitely consult with your accountant and your attorney about what type of entity, if you want to proceed in that way, is right for you. I would say the most common types of entities that I see in my business are limited liability companies and S corporations. Both of these types of entities are pass-through entities for tax purposes. And they each have their advantages and disadvantages. From a very high level overview, limited liability companies do offer a bit more flexibility in terms of management structure and distributions that can be made to the members. But, there is self-employment tax that you have to, pay on, your income and your profits. S corps are, there are certain rules regarding who can be a shareholder. You can't have more than 100 shareholders. You can't have trusts as shareholders. There's a bit more regulation surrounding that. But one of the things that you can do with an S corp is you can take a reasonable salary if you're in an industry that provides that. And I believe that some of the withholding taxes would be not as onerous as an LLC. And I'm sure Greg could speak to that. But so there's a lot of considerations that come into play when you're trying to decide which type of entity to form. And it is really good to consult with definitely an accountant and an attorney rather than, you can form your own entities on, LegalZoom and other websites, but they're not going to give you the nuanced information you need to make sure that it's going to benefit you, from a cash flow perspective, from a tax perspective. There's just a lot of considerations that, have to come into play.
Right. So kind of a follow-up here, Natalie, what cash flow strategies will aid your business when you're looking to sell? I know an attorney gets involved for sure. That when those things happen as selling, and do these strategies, are they the same if you're just making a major transition in your business or selling the business, buying a business? How do you deal with the succession planning and due diligence and such? And I think, we might have Greg pipe in here if Natalie doesn't cover it all.
Okay. So if you're looking to acquire another business or sell your business or, bring in a partner, and this is kind of some of the things I've said earlier, but you really want to make sure that all of your books and records are easily accessible and up to date. And what's on the screen now is a very, very scaled back due diligence checklist of things that people, who are looking to buy your business, or if you're looking to buy another business, things that you should be really getting into the weeds on. So, number one, organizational information. So this is all about the type of entity that you have formed. You want to have your organizational documents, resolutions, organizational charts, everything easily accessible. If you own real property, you want to make sure, all your title documents are easily locatable. You can find them, you can get those updated. If you have environmental reports, all of these things are going to be things that potential buyers and if you as a seller would be looking at. You want to have a really good list of all your tangible assets. You want to have, all of your contracts and agreements that you have with suppliers, vendors, software contracts, things like that might get, sold in an asset purchase deal. You want to have those easily accessible. To the extent, you're in litigation or you have regulatory filings, they'll want to review those. Intellectual property, if you have, patents or trademarks or, licenses, those will be closely looked at. And obviously the biggest thing, and why we're talking here today, are your taxes and financial information and your accounts receivable. So again, really making sure that you're working with your accountant, with your lender, and with your attorney as needed to make sure that all of these documents are up to date, are accurate, and tax returns have been filed on time, things like that. And then there's a couple other, things on here. If you have employees that have employment contracts, if you have benefit plans, all of this, everything related to your business, if you're going to sell or buy, is going to be, highly scrutinized. And again, it depends on how big of a business you are. If you're a really
Right.
small business, some of this might be completely inapplicable. But, if you're a really large business, this due diligence checklist could be 10 pages. So it really depends on your particular business, but these are just an example of things that you want to, have in order and be able to produce.
You need to be organized with all of this. And so thank you, Natalie. I really appreciate that. We have, we're really good on time. We want to get to the questions from our viewers today. And as we go into them, I wanted to start with you though, Ron. Natalie just gave us this incredible list of very important things. And I look at that and it could seem very overwhelming to someone watching today. Like, holy cow, how do I handle all this? So when you, Greg, how do you know it's time to hire a bookkeeper because I'm out of my league in my business? How do you know when it's time to scale up? I'll start with you, Greg, on that.
Well, I think one of the most important, I think it's important right from day one. I have worked with a lot of business owners that may have set things up, and some people do a great job. Others don't know what they don't know. And really getting the systems and the software set up and getting a little bit of training ahead of time is really a good way to start. And then it's really just trying to understand how busy you are as a business owner, right? Because you open that business, you create that business because you're passionate about something, you can do a better job at something, you have this really great product or idea, and you don't want your time spent doing the accounting records and things like that you can hire somebody else to do, because your time is significantly more valuable to grow the business and do the things that you really enjoy. And like I said, there's things that you don't know and some planning techniques that other people can add. And maybe you have a bookkeeper come into your office 4 hours a week kind of thing, right? You don't need to hire someone 40 hours a week plugging away at a desk, but there's all types of bookkeeping places out there, or independent bookkeepers, or hiring someone directly. There's lots of options, but at an absolute minimum, I think you really need to get with someone to help you set up those books, give you some good overall training, and maybe check in with you a couple of times after that, maybe once a week, maybe once a month, once a quarter after that, and start to space that out. And I think really your tax accountant is a good option for that, because you're going to be working closely with them with taxes anyways. But day one is really the best way to get that set up and get that infrastructure rolling the right way.
How much does it cost to hire a tax accountant? If I'm a small business owner watching right now, like what kind of percentage of should I be spending on my salaries to get help? That's kind of an out of the blue. That's my question. Maybe you don't have an answer, but
No,
right? Like what does it cost?
Yeah, it's a tricky
Ish.
question. So, the best thing to keep things in line price wise is to have a good set of books. Where we spend a lot of our time is trying to correct the books, because things just haven't been reconciled, things haven't been done accurately. But if we have a good set of books, we can help with planning, we can help with, tax mitigation options, things like that. And we can really do the heart of the tax work. But a lot of the times we spend 70% of our time getting the books in good shape. So if that's neglected, that can unfortunately be the costly side of it. So.
Okay, makes sense. So kind of on the same theme, this will go to you, Ron. As we've been discussing this hour, building a team of reliable experts, be they somebody in your office or someone you hire out, like you just mentioned, Greg. How do you know though, Ron, when it's time to switch your banking partner? I mean, that seems like a pretty dicey, just difficult transition, doesn't it? And how do you know when it might be time to part ways? Any tips?
Yeah, I think, your banking relationship should be easy. Your banker should be reaching out to you. You should be communicating with them. I think, as you're looking at it, and if you're not getting as warm answers, if things are taking a lot longer I think that would cause for concern a little bit, because at some point when you're going to need something, you're going to need it, quickly. So I would always be, considering that and looking at your options and just talking to your banker, asking what's going on. Sometimes maybe the bank grew in a different direction and you're not as valuable of a client today, but having that banker and that relationship is so important. So it's something that, I'd be talking to your accountant about, talking to your lawyer about, and just understanding that and have a conversation, with the banker too, with your relationship manager.
Kind of makes me nervous, right? I mean, if I'm a business owner and I'm like, yeah, I'm not feeling the love, isn't that a hard conversation to start?
I don't think so. As a banker, I think your banker should want what's best for your business.
Mhm.
And, if the bank has grown in a different direction, or maybe you're not, fitting into the box, if you will, for that credit, structure today, they're
Mhm.
going to tell you. They're going to tell you by the way they react to the things you're asking them for. So.
Okay, thanks, Ron. And coming in from our audience, this one for you, Natalie. On a similar vein, why is hiring a lawyer important for my business? I hear of others hiring LegalZoom, but I hesitate to not have a local person to talk to. What are your thoughts on that? The things that are available on the World Wide Web versus a real life person in the same room. Thoughts?
So I guess I would say to that, every business is unique and different. And the LegalZooms out there can certainly, file a document with the Department of State and give you a certificate saying that your business is formed. They'll give you, standard bylaws, standard operating agreements, but there's a lot more to running and owning a business than just like those pieces of paper. And what ends up happening is those pieces of paper, you might form your business that way, through LegalZoom, and in 5 years, you're at a completely different place than you were when you formed. And those documents are just not, going to be helpful to you, and actually, could you could have problems later on with them. And I've seen this especially with limited liability companies and operating agreements. They're just so standard and pro forma. They're not taking into account the economic relationship you might have with your partners. They might not have nuances regarding distributions or buyout, like buy sell provisions. They're very straightforward, but you might have a different idea of what you want to happen in the event of a disability or death, or you want to, if someone wants to sell their shares or their ownership interest, you might want them to offer it to the company first and then to the shareholders. But the documents that you're going to get from these websites, they're not going to take those things into account. They're just going to spit out a form that is serviceable and works, but it's just not tailored specifically to your needs. And so that's what an attorney can help do from the start. Is when you start your business, maybe it's just you, and maybe it is very simple, and in that case the costs of the attorney are going to be minimal. It's just going to be drafting a set of documents, but then you have that relationship with that attorney, and if you want to bring up a partner, that's going to be there to advise you, like, well, here's what we recommend to add a partner, here's the partnership provisions that are going to protect you. And maybe you want to structure the distributions differently. Maybe you've been an owner of the business for 2 years and, you want a preferred return on your distribution. There's all sorts of considerations. And so, you can form your business on the website, but you're not going to get that individualized assessment of what's going to be the best for you.
Thank you, Natalie. That makes a lot of sense. I'm going to start with you, Ron, with this. Some questions coming in about, what do you see in your office most days? What are the problems and the content that people are coming to you for to fix or to help or assist? What are the biggest concerns that you're seeing from small and medium business owners?
Yeah, a lot of it's, just financing it the right way. If you're a growing business and you really have permanent working capital, but you've over lent, if you will, on your line of credit, just put in the pieces of debt in the right buckets that allow for cash flow for the business. So at the end of the year, the owner can actually take some money out of the business and utilize that to live in it. I always say I always want a business that the owner can make money from. If you have a happy business or happy owner, they're certainly more incentivized to work hard for the business and pay back the loan. So.
Okay. How about you, Greg? What are some of the common concerns that you're seeing with small and medium business owners right now?
Well, fitting, it always comes down to cash, right? Like that's always, the cash is the lifeblood, as we mentioned earlier. And a lot of the things that we're asked to do as far as tax planning, and does this entity make sense for me? And should I lease or buy that new vehicle? A lot of those big questions, it's hard for us to answer if there's not that good accounting infrastructure in place, because that's our starting point to look to see, what's your net income or loss for the year? What does your cash position look like? What money's coming in the next 30 days? What big payables do we have going out? So that's the biggest obstacle that we run into, and the biggest concern is getting that day-to-day accounting in order, because when that's done, and that's done with quality and accuracy, then we can do the things, that we do to help that business. But that's probably the toughest spot, is when that stuff's not in order. It makes our job very, very difficult.
I picture like someone coming in with their just bags, those tote bags full of random papers, and like dumping them on your desk. Help.
Yeah, I always say it's like trying to put the roof on the house before you pour the foundation. So
okay, I can visualize that too. Awesome. Natalie, same question for you. What are you really seeing in your office? What are people doing right? What are people doing wrong in the small and medium business world when they get to you?
Yeah, so I feel like I've said some of these things before, but I mean, probably, one of the most common questions that come up is what type of entity to form. And like I said, we could have a whole webinar on, the nuances between the different entities, but that's always a really big question. Another thing that comes up a lot is negotiating partnership provisions, in your operating agreement and in your shareholders agreement. So, structuring like, buyouts. So when someone wants to leave, what's that going to look like? If the entity is going to dissolve, what is that going to look like? How is the business going to be managed? Are we going to have, the board of directors? Are we going to, if you have an operating agreement or in an LLC, are you going to have the members managed? Is it going to be manager managed? There's a lot of considerations and, regarding the management of the company. And then, the other big piece of my practice is, when you want to sell or acquire another business. So a lot of the questions that come in and concerns people have is, evaluating whether to buy a business. And then that big due diligence checklist comes in. And so, they come to us and, want to buy this business and, I need help. And so we send them the checklist. And, a lot of times we have, like a portal where, we can upload due diligence and review it with the client, review, real estate information, review, financial records. So, those are sort of the main things that we deal with.
So as we close we still have about 10 more minutes. So if any of our viewers have any more questions, please continue to fire away in the Q&A. But as we start to wrap it up here and wait for some more questions, I was wondering for all of you, when you are dealing with a first-time business owner versus like someone who's been in the business for 50 years, are we looking at the same types of needs for those types of business? I just have seen a lot as a consumer, a lot of new businesses post-COVID, and of course, in COVID, a lot of businesses closed. Are things similar or different when we're dealing with cash flow strategies for businesses that might just be starting out today versus, 5 years ago?
I think, way different. I think just a level of experience, to me with a new business, I try to share more stories, more things I've seen go right, things that haven't gone right, and just share those experiences so that owner who's new to owning a business and running a business on the day-to-day can just, put that kind of in the back of their mind. An experienced business owner, they've seen things work, things not work, but certainly it's always helpful to, be, when you see the financials, to be honest with them about what you're seeing. Is the margin decreasing? Is the margin expanding? Are they taking on too much risk with one main customer? What does that mean in terms of financing and their fixed costs down the road? So I think it's different conversations, but good, to me, good conversations, fun conversations.
Great. Greg or Natalie, you want to weigh in on that thought about new businesses versus longer term older businesses?
Yeah, for me, just like Ron said, it's pretty different. So, one of the things I've been fortunate to be able to do is start those businesses out with, setting up their accounting systems and software and training them. And then after years growing with them, right? So it's more of the day-to-day helping them with the accounting. And then we grow, and then we help them interview for a controller. We help them understand what the mechanisms are for buying a building and how that, working with their attorney and their banker, how that should be structured. When we walk into an experienced business, it's totally different. They're wondering how we're going to help them with tax planning and help their CFO manage cash and things like that. So it's cool because we're able to fill that whole gamut. But starting out with the business on day one and watching them grow is one of the most rewarding pieces of it, is seeing them get to their goals.
Right. That's great. Natalie, you want to weigh in on that? Do you have any thoughts?
Sure. When, if a large business owner or a small business owner comes to us that's been in business for 10 years, and it's a business that, we haven't worked with before, we're not familiar with, that it is going to be a different set of circumstances and a different list of questions we're going to ask versus, someone to us from the beginning. And it kind of goes back to if they've kept impeccable records and everything is, buttoned up and accessible, then the business owner that's very experienced is our job is going to be a little easier in terms of navigating whatever question or issue he comes to us with versus or she versus someone who maybe just is so overwhelmed and pulled in different directions and hasn't been able to keep records the way they should. Our job is going to be we're going to treat that a little differently, and it might a little bit more work. So that's from a legal perspective, sort of what we see.
Okay, great. Well, thank you all for that insight. And thanks to all of our panelists. Great conversation, great information for our small and medium business owners out there. Thanks to all of you for joining us today. I want to thank our panelists specifically again, Ron Tascarella, Greg Smith, and Natalie Hempson Elliott. You have their contact information up there. Feel free to contact them directly with any questions. And a special thanks, as always, to our presenter, Pathfinder Bank. Note this webinar was indeed recorded and can be accessed via a link that you'll find in a thank you email. You'll find in a few, I think, days here, also on the website at Pathfinder Bank and on Syracuse.com. Thanks again for joining us for this webinar, Strategies for Healthy Cash Flow Management, presented by Pathfinder Bank. Everybody have a great afternoon. Thanks for all the information, team.